Hi, my name is Maheen Sami, and today we will be talking about the fundamentals of startup financing. What is the backbone of any business? Finance, without a shadow of doubt. Once your financial management is sorted, your business is sure to prosper. Now let's start by looking at the fundamentals of startup financing. Financial planning and analysis is important in order to determine a company's strategic objective, vision, and mission. While accounting is about looking backwards, financial management is about looking forward. In the world of startups, you can tell how important financial planning is while looking at companies with huge valuations and no revenue. This is because most of the company's value comes from its future projected earnings. No matter the size of your company, you will have to engage in financial budgeting, forecasting, and analysis in order to take key executive decisions. Now, the second thing to understand is the different sources of financing requirements required at different stages of the startup and the risks associated with it. The first would be personal financing. That includes personal assets, for instance, your car or a house, retirement accounts, as well as home equity loans, in which the borrower uses his or her equity in the house as collateral. The second would be internally generated cash from the startup, in which cash flow management is the inflow and outflow of money from cash generating activities, as well as balance sheet management, which is the financial management of assets and liabilities. Now, the last thing to understand is corporate investors. Corporate investors normally acquire certain control of your business. In this, we need to understand IPOs, initial public offerings, in which you sell your stock or equity for the first time in the general market to an individual. These markets are often controlled and regulated by government agencies. One such example of such a market would be the stock exchange market. Therefore, it is very essential to understand the requirements of different sources of financing before you raise funds. Also, the risks associated with those sources of financing. While understanding the fundamentals of startup financing, we also need to understand the financial forecasting as well as the financial statements. The financial analysis is normally done over 3 years. This includes the current year and the prior year income statement as well as the balance sheet. We also need to cover the profit and loss statements for the next 3 years. Another important thing to understand while understanding fundamentals of startup financing would be the creation of pitch deck. Now, what is a pitch deck? A pitch deck is a brief overview of what your startup does, its business model, as well as its revenue model. The basic element of a pitch deck is to give an overview to the investor while they're investing in your business that what is the market opportunity you are catering to as well as your team. Another thing to understand is the KPIs, the key performing indicators that are applicable on your startup. We need to understand the KPIs both qualitatively and quantitatively. Now, the last thing to understand is the valuation and the valuation methods. What is valuation now? Valuation of a startup is the process through which you give value to your company. Post-money valuation is calculated through pre-money valuation plus the investment that your startup or business has raised. Why is the post-money valuation important? There are two reasons for this. Because it gives an idea to the investor what the value of your company would be after they have invested in your business. Now quickly, let's take a recap of all the pointers that we have covered in this video. In order to sum it up, we have identified the key areas: cash flow management, different sources of financing, the requirements of different sources of financing as well as the risks associated with it, financial forecasting, pitch deck preparation, key performing indicators, as well as valuation and its methods, including GMV, revenue multiplier method, and the Perkins method. All of these are essential to gain an understanding of the fundamentals of startup financing. Thank you so much. I hope you found the video informative.